Hey all, welcome to ShareTreck. This is Raj here, and good morning to you all. Just setting up everything, and good morning, Inf. I'm ready for the morning. Let's go on to our usual place where we start. That's going to be the CNBC website, and as you can see, all the index futures are looking red. And for me, the biggest takeaway is that yesterday, I think Jerome Powell didn't have a clear idea of where we are going. And a lot of uncertainty was seen in his discussions. So I think if Jerome Powell doesn't know what's happening, I think as retail investors, we are even less likely to know what's happening. So we are all navigating blind. So I think that I would have my market exposure at the minimum and probably get back into gold. I had sold off ZGLD to book some profits. And ZGLD is back down again because it hit the line of resistance on a bull channel. So I'll find the appropriate time to get in and have a little bit in ZGLD, and then I'm going to just stay back and watch what's happening. So that's my plan. And some of the things that I see out here which concern me are this stagflation. Fed sees higher inflation and an economy growing by less than 2% this year. So what does that mean? So stagflation basically is high inflation with economic stagnation or slow growth. And in this kind of environment, commodities do well. Gold and precious metals store value. Energy, metal, and agricultural products that meet basic needs perform well. And select consumer staples will do well. I'm saying select consumer staples because I don't want to say Walmart and Costco, because even though they carry consumer staples, they have discretionary items also. Like, for example, I know for sure that Costco sells diamonds, jewelry. It also sells other items like patio furniture and stuff like that, which are discretionary. It's not purely like just food, basic foods. It's not like that. So you have to be careful which companies you select. I would say Procter & Gamble, for example, would be a good example of a consumer staple. Those kind of companies are likely to do well. And another thing that could probably happen is that if US goes into stagflation and Europe is not in that kind of environment, funds can start flowing into Europe. And we are seeing a little bit of all of these happening when we look at economic data and when we look at TradingView and the currency section. And how do we know that stagflation is arriving? So the first thing is that CPI goes up, which has happened for us, and then wage growth also keeps going up, which is also happening. Real wages are going up. That's a positive thing, but GDP declines over multiple quarters, and that's what we are looking at. And there'll be rising unemployment and falling industrial production. When you look at PMI, it will show up with PMI going below 50. And inverted yield curve persisting for a longer period of time would indicate that we are in a stagflationary environment. So with that, I think I would like to go and have a look at the stock market heat map to point out something to you. If you look at the energy area, right, this is 1 day performance, we are green. I'm going to 6 months. Energy was still predominantly green. And then if you go to 3 months, energy was still green. And if you go to 1 month, energy is still predominantly green. And if you go to 1 week, energy is still green. And if you go to 1 day, energy is green. So I think the top picks out here are going to be Exxon and Chevron. These are two top picks which are predominantly green for the last 6 months. So I'm going to watch Exxon and try to get a little bit of position into Exxon. And my reasoning is that even if saber rattling leads to geopolitical conflicts, oil prices are going to go up. And this is again part of consumer staples. I think energy is going to perform very well even in a stagflationary environment. So I think Exxon and Chevron are two things that I would like to look at. I'd like to hear from you guys what you think. And now I'm going to go on to NASDAQ futures, and let's get started with the technical analysis. I'm going to put more emphasis on technical analysis, and we'll go through the major indices in detail, and individual shares we will limit it to a few shares, because I think we have to look at the overall picture and get a guideline, given that we don't have specific direction. Even Fed is not clear where we are going. So I'm looking at NASDAQ futures, and I can see that NASDAQ futures is above this area of support. So that's a very good sign for NASDAQ futures. However, we can see that we have been pushed down from 20,038.50. Now the question is our downward legs going to start from this line of resistance at 20,038, or is it going to start from the confluence of 9-day and 200-day exponential moving average, which is sitting at 20,231.70? I'm not clear about that, but if I assume that this is going to be our turning point back and this is our bear flag, then what I would do is I would take a line from here to here, and I'm going to move it from there and put it out here. So we could go all the way down to 17,209 if this ends up being a bear flag. When do we know that it's not a bear flag? It's not a bear flag if it continues its movement like this and crosses over half this decline that we have here. Right now it has, I think, crossed only 33%. So the moment it crosses 50%, then I would say that it's no longer a bear flag, but it's a bull channel that is getting created. Right now we are not there yet, and the first test is going to be breaking above 20,038.50. The second test is breaking above the 200-day and the 21-day exponential moving average. I would say that is in the ballpark of 20,231 at the top side. So once that happens, I think we have a very good chance of forming a new bull channel. And why not? Because in the past, our declines have been close to 10%, and our current decline from where we turned back with this bear flag is identical. It's almost in the 10% ballpark. But there's a big difference right now. Right now, the difference is that we have policy uncertainty to the extent that the word uncertainty was used many times by Jerome Powell, and they are just waiting and watching. And I think we also have got to wait and watch. Given those things, I think the risk of us going down is much higher than the risk of us going up. But at the same time, we can't discount the risk of us going up, because I wouldn't put it past Trump to just drop all the tariff talks and just show another shiny new object and go off golfing and take out the next 4 years. That's very much possible. Like, this is a very different president. Other presidents would think that once they have said something, they have to follow through on it. I don't see a follow through possibility. So either way, we could go up or we could go down. There is no clarity. If we were to go down, 17,150 is how low we can go. So that's where I would leave the NASDAQ. Let us go to S&P 500. So in S&P 500, again, I have drawn a similar line, and I think S&P 500 can go all the way to 5,150 if our fall starts. Pre-market, NASDAQ is also negative at minus 0.52, and S&P 500 is also negative minus 0.37. Again, with S&P 500, the most important thing is we are still below the 200-day exponential and 5,738, which is the confluence of a horizontal line of resistance as well as S&P 500's 200-day exponential moving average. And then on top of it, we have the 9-day exponential, which is this yellow line that you see here. All of them are trying to push it down. MACD is bullish, but it's ready to turn over to the bearish side, and momentum is still not above average. And if you go to NASDAQ also, you don't see that high a momentum. And I think at this point of time, it's a coin toss either way, but the pre-market suggests that we are in for a negative day. So we could even have a whole lot of zigzag consolidation happening while we wait to see something happen. But think about this. On the 2nd of April, reciprocal tariffs are going to trigger. Right? If reciprocal tariffs are going to happen on April 2nd, how many business leaders are going to invest money to expand manufacturing facilities, to expand their business? No, they're going to sit and watch. They're not going to put new investments, so growth is going to get shut down. So GDP growth is that way going to be muzzled. So I'm thinking that unless on April 2nd, Donald Trump suddenly decides to say that, oh, I'm just going to stop all these tariff talks. I've got another way of improving the economy, and he moves on to something else, then you can see the market bounce back like crazy. But if he doubles down on April 2nd and says international reciprocal tariff go through, then I think we're going to have a whole lot of uncertainty coming in, and business leaders are going to double down on not investing in growing their business. At that time, I think we have to go for the stagflationary play. That's what I'm thinking is likely to happen. So that's where I am looking at the markets going. Next, let us look at dollar index. Dollar index has firmed up a little bit, and it is consolidated a lot. And this area of support at 103.29 seems to be very strong, and we have bounced back. We have some kind of a rough double bottom out here, so we could go up further and meet the 9-day exponential. So that's very much in the cards if possible. And then if you look at the 10-year yields, they have fallen down below the diagonal line of support that we had. Now that becomes a diagonal line of resistance, and the yields are coming down. When the yields start coming down, I think you can expect market should, money to go into the stock market. So to that extent, I think even though we are seeing negative right now in the market, in the pre-market trades, it can turn around maybe an hour or 2 hours into the session and become positive. But overall, if I look at the geopolitical situation, if I look at the policy uncertainty within the US, I do not see any reason for us to go up, except for the fact that we have dropped a lot. So I'm thinking that we are still in a dead cat bounce if that happens. And if we start consolidating, I would say we are in a wait and watch mode to get a clarity on what's happening with the worldwide tariffs. And once that clarity arrives on April 2nd, we will find direction. So that's where I would like to leave the macro out here. Now let's go on to indices and look at S&P 500 and see if we can get any clues out here. So this is where we left the S&P 500 yesterday. We got pushed down by this diagonal line of resistance and the 200-day exponential moving average, both jointly. And those forces still remain for today. And I think for us, the most important thing today will be to break through this diagonal line of resistance and the 200-day exponential, and then challenge this diagonal line of resistance. So the peak of resistance today stands at 5720.73, and it goes through 5702.68, and it also goes through, I would say, 5678.70. These are the three resistance points, and the support point is going to be around 5580 for S&P 500 today. If you look at NASDAQ, we are seeing that we have broken above this horizontal line of support of 19,700. So I'm going to mark that green. So that becomes a support. So for us, our support today is 19,696. And if we break that, then our next support is going to be 19,461.43. However, on the upside, our resistance today is going to be 19,967.54 for NASDAQ. So that's where I would leave that. And then if we look at VIX, the VIX has gone up by 2.77%, but it's still below this diagonal line of support from earlier, which has now become a diagonal line of resistance for us. So we could potentially also move under this line and still keep on going up. So that possibility is also there. And we have this, I would just draw a line of resistance out here and say that this is also a diagonal line of resistance that we are looking at. If we break this and go out, then we are going to follow this diagonal line of resistance. So those are the possibilities for VIX. And if you look at Dow Jones is being held down by the 200-day exponential, which is again going to be resistance for today. And if it breaks that, then the next resistance is going to be at 42,346.71. And then if you look at Russell Index has broken out of the diagonals. It is trying to create a kind of a bear flag. And if this bear flag persists, then we could come down equally. I could draw a line out there, but I'm not going to do that right now. We don't follow Russell index too much, but the resistance for Russell index is going to be the 9-day exponential sitting at 208.86. And also we are going to look at this horizontal line of resistance at 210. And on the way for support, I think the support is way below, somewhere around 197.85 for the Russell. Put call ratio is looking bullish to me, mildly bullish and tending towards a neutral. So bullish to neutral is what I would characterize put call ratio as. And if I look at gold, I can see that gold has come back down again. If you recollect, friends, I sold gold yesterday because it was coming very close to this diagonal line of resistance. So I'm looking at this positively. I think that it could come down a little bit more before marching back upwards. So I'm going to buy a little bit more gold when it comes down to the purchase price at which I bought it the last time. So I'm waiting and watching for gold to go down there. And if you look at XLP has not yet picked up. It has not created the reverse head and shoulders yet. And I would look forward to the completion of the reverse head and shoulders so that we can draw a target and start buying XLP to ride the way back up, whether it's a stagflation or a recession. So that's what I'm thinking is happening out here. Now let us go on to look at AI. NVIDIA is a stock that I want to look at in detail. NVIDIA is down 0.24%. I had bought NVIDIA shorts and I regretted it. It was a premature purchase. I should have waited until it hits this diagonal line of resistance. So I'm going to remedy that today. But right now it's being pushed down by the 9-day exponential moving average, which is sitting at 119.87, and the 200-day exponential moving average, which is sitting at 120.88. And you can see that a death cross has been formed here on NVIDIA, which was also one of the reasons why I bought the NVIDIA shorts. But I'm going to try and get out of it because I think the more conservative approach will be to wait for it to hit this diagonal line of resistance and then get into it and then ride the way back. Right now, the resistance is already the 200-day and the 9-day exponential, and the support for us today is going to be at 114.53. The resistance is at 119.87 and then at 120.88. Those are the two levels of resistance. MACD is looking decent. Momentum is also picking up. So I wouldn't worry too much about the negatives. I think it's going to go up. And then we look at Meta. Meta is down 0.13%. And if it bounces back from this diagonal line of resistance, which for today is going to be somewhere around 593, I would then go for a short and come down. And we still have support from the 200-day exponential. So to that extent, Meta is looking good, but MACD and momentum leave a lot desired. Then you go to Google. Google is down 0.60%, and it's got a resistance which is at 169.10, and it has got a support which I think for today is going to be around 165.04, and we are already above that at 165.28 in the pre-market session. So I'm going to mark this as green. So that is going to be the first support for today, and the second support for today is going to be 164.49, which also I am going to mark green. So those are the two supports that we have today for Google. And then if you look at Amazon, it is down 0.23%. And do we have a resistance out here? I think we have resistance at 195.64, and we are at 195.09 in the pre-market session. So I think that's going to be the first resistance, and the next resistance is going to be the 200-day exponential, which happens to be at 201.05. And then you look at Apple. Apple is still riding this mild bullish channel. It's still above this. So for today, I think the support is going to be 214.04. We are at 214.60, and our resistance is the 200-day exponential. So I'm out of the Apple shorts. I'm going to watch for Apple to go ahead first and break through this diagonal line of resistance. When it does that, I would be very happy to buy into Apple and go long. But right now I'm watching it. I'm thinking of this as a bear flag ready to go down. And if it goes down, it will go down a long way. So I want to be careful with Apple. Microsoft is down 0.36%, but it's still above this diagonal line of resistance. and I think its resistance today is going to be 386.90. It's at 386.23 right now. So the first resistance is 386.90 for Microsoft. So I'm going to mark that red. The next resistance is going to be 9-day exponential at 393.40, and then the support, the first support is going to be this diagonal line of resistance. So I would say that a support is going to be available at 384.84 for Microsoft. Then we go to Tesla, which is down 1.29% today, and it's at 232.82. And I'm going to just check where we are out here in this resistance. Wait a second, let me just look at the resistance. We have 233.06. This is the line of resistance that we have out here. We are at 232.97. So I would say our first resistance is 232.49, and our support is going to be this diagonal line of support. This is the first support, which is going to be 228.50. That's going to be the support for Tesla today. And Oracle is still within a bear channel, and our resistance today is going to be working at 153.65. And let us look at AMD. Thanks to Hot Dog for giving me a heads up on AMD. I did a little more looking into AMD. I think that AMD price to book looks very attractive. So I would like to watch AMD bounce back from this the diagonal line of resistance out here. And if it does that, then I would be looking forward to go short on that. However, if it did not do that, then we would have potential reverse head and shoulder forming. So I'd be very careful with AMD. And today pre-market we are down minus 0.41%. That takes us to 105.79. And for today, I think the support for AMD is 105.48, which is this diagonal line of resistance. We are already above that. So I think that's going to be the first support for AMD, and the second level of support is going to be the 9-day exponential sitting at 103.82. So those are the two supports for AMD, and I'll also be wary that there could be a potential reverse head and shoulder forming out here. So I'm going to be watching for those things. So I'll stay away from AMD for now because I don't know what's happening out there. And Intel has dropped again today in pre-market, dropped 1.16%. And there are some news that TSMC is not actually doing anything with Intel, and that has come up from some highly placed source in TSMC. So I think that Intel will try to do a gap up covering, and therefore if there's a ETF that does Intel shorting, I would go into that ETF and ride the way back down. I think that's a surefire way to make money. Again, personal opinion, do your own due diligence. Don't take this as a financial advice. SMCI is down 0.82%. Unfortunately for us, it has already fallen below this diagonal line of support. And for today, the diagonal line of support is at 39.87. We are at 39.76. I'm going to leave the line red at this point of time because anything can happen between now and market open. And Qualcomm is down 0.80%, still within this bear channel. So for Qualcomm today, there is strong resistance at 158.53. And the support is at the very bottom, so I don't have to mention that. Broadcom is down 1.01%, and its resistance again remains at 198.64, and the support for today is going to be 189.22. And then we look at Palantir, which still has got great support at 83.68, and its resistance still happens to be 87.30. If it breaks through that, I think that it can continue going up regardless of the high PE ratios. And then I would like to go and have a look at Rigetti. Rigetti is down 1.36% and still on the bull channel out here. And SMR is down 1.40% after going up 11.76% yesterday. So it has got support from the 9-day exponential today, which happens to be at 17.87, failing which 16.69 will perform the support. MACD is looking good. Momentum has also gone to average. I'm hopeful that we see a turnaround out there. AV, I don't want to talk about those things. Let's go to JD.com. My friends, I have already sold JD.com at a very low profit, but I took a profit and came out of it because $4,400 hanging in there with risk was something I couldn't stomach. So I'm keeping that cash in the sidelines, but I still think that JD.com is on a bull channel and there's going to be more positive ahead for JD. Now let's go on to have a look at genomics. I think for all of genomics, it's a coin toss. If the market goes down, genomics is going to go down along with it. And Verve is still riding this diagonal line of support, and it's down 3.74% in pre-market trades. Likewise for Ginkgo Bioworks, it's below this minor line of resistance, and that's going to perform the role of resistance again today, and that's going to be at 7.75. Ginkgo Bioworks is already down 2.14% in pre-market trades. Caribou has got no trades in pre-market, but it's still riding this bear channel all the way down, and it has got support somewhere at 90.93 cents, and its resistance is the 9-day exponential at 1.12. Let's look at CRISPR Therapeutics, which seems to be honoring this minor line of support, which happens to sit at 40.79. If it did fall below 40.79, I'd be very happy to pick up closer to 38.70, and its resistance happens to be at 42.84 today. Pre-market it's down 0.67% and it sits at 41.66 this morning. Grail is continuing to ride the diagonal line of resistance out here. It's on the bear channel, and if it does touch the bear channel top out here, which happens to be at 30.47 today, I would definitely short it if I could, but unfortunately there is no Grail ETF, which is a short ETF. So, and I don't have the kind of money needed to plug in meaningful amounts and do a covered call. So I'm just going to wait and watch what happens with Grail. Prime is up 1.50%. It's still struggling to break through this diagonal line of resistance, which has been sitting here for a while now. And for today, the diagonal line of resistance happens to be at 2.02. And fortunately for us, Prime is at 2.03, but it's neither here nor there. I'm going to wait and watch what happens when the market opens. I think on the balance, the chances of it falling down is more than the chances of it going up. Beam Therapeutics is down 1.99% in pre-market trades, and resistance continues to be at 25.10. And if you want to look at something which would be a minor line of support, I would say 22.48 is where I would look at. And then Altimmune is down 2.24%. For it, the resistance is the 9-day exponential sitting at 5.91. And Bluebird Bio, earnings are due. And we don't know what's going to happen with the earnings. It's just consolidating in that area out there. There is nothing much to talk about Bluebird. Allogene, I think it's going down 1.18% in pre-market trades. And yesterday it closed flat with a long dragonfly or a sword kind of a pattern out here, and I think it could continue coming down. There's a gap fill that can attract it, and it could come in to fill up the gaps. That's a distinct possibility. mRNA is down 0.36%. It's got resistance from the 9-day exponential at 34.16. If it breaks through that, then it has got resistance out here at 35.38. And ARCG is down 0.43% in pre-market trades. PSEB is down 1.60%, still has support at 1.21 out here. Intelia is down 2.04% in pre-market trades. I think the first line of support for it is 8.97, and first line of resistance is a 9-day exponential at 9.82 out there. Illumina is continuing to consolidate in a range-bound manner. It's operating in a narrow range. Support seems to be available at 80.60, and a resistance is available at 89.39. Until China removes it from the blacklist, this is where we are going to be. IMTX is down 6.52% after going up 5.09% yesterday. And our resistance continues to be 5.34. And the support is the 9-day exponential at 4.81. Editas is down 3.60% after having gone up 5.70% yesterday. And I think that it's going to continue coming down. We are seeing this, this started off as a bull flag, but it's no longer a bull flag once it fell down 50% below the flagpole. So now it's a bear channel and it's going to continue to go down. Iowa is down 0.98% after falling 0.28% yesterday, and it's below this diagonal line of resistance. And for today, the resistance is going to be around 3.64. Right now we are at 3.53, and if you are looking for some kind of a support, I would say support is at 3.50. And what else do we have here? Vertex is down 0.06%, and I think it's going to stay above the 9-day exponential, which is at 491.17. It's riding a bull channel in the long run, so safe stock at this point of time. Next, I want to go to currencies. And let us look at currencies. Open the list, go to currencies. I'm looking at Bitcoin USD, which kind of mirrors the stock market. It's again going down. It's at 85,000. It's looking stronger than it did before. And it has got a series of higher lows going on. And we also have a higher high out here, a couple of higher highs. So overall, I think we are attempting to create a bull channel. We are still bounded by the 9-day and the 200-day exponential sitting at 85,525, which is continuing to push us down. We are at 85,358 this morning. If we break through that, then we have minor resistance, which is going to hold us back at 87,427. However, if we started falling, our support is going to be at 80,452.93. That's going to perform the role of support. And as I've always mentioned, that we are more likely to go all the way to 73,000, given the overall uncertainty. And I think Bitcoin is still not an inflation hedge or a refuge in times of uncertainty. But if the US Bitcoin reserve comes into place and they start putting the money that they get by reevaluating the gold and putting it into Bitcoin, and then that could probably be a game changer for Bitcoin. Until that happens, we are still looking at vaporware out here. So that's what I would say with that. And what else do I have here? So that's about it. And I think I would like to look at Exxon Mobil. I'm going to go to XOM. I'm thinking of buying Exxon. I see a whole lot of consolidation out here and a whole lot of movement upwards. So I'm thinking Exxon Mobil seems to be a safe bet. I have made profit in the past with Exxon. So I'm thinking I would like to get a little bit of Exxon today. So this is what I wanted to disclose to you guys. Having said that, now let me look at what is happening in the comment section and respond to everyone who is out there. So we have info out here, and wait a second, let me go here. So yeah, so info, you have a wonderful trip. That's all I have for today, my friend. Enjoy your 1-month vacation and be back safe. And bye for now. I'll catch up with you guys again in the next video. Take care.